Howdy YouTube, Tumbleweed Tommy here, and welcome back to the Eric Krown Crypto channel, of which we have so much to be discussing today, as it is a new week of new opportunities. We got CPI prints coming out tomorrow, we got Ethereum merge happening a day or two after that, and there is a lot to be preparing for in the higher term timeframes, of which I wanted to come at this from a probabilistical standpoint and analysize the good old markets right here, specific to the higher term timeframes. I'm going to lead off this whole video by saying that there is going to be a potential trap setup, which is, somewhat far away from being confirmed as of right now, but I feel very compelled, or like it is important to say this at the outset, because if that is hit, then there's going to be a lot of fun action to be happening in the next few weeks. Anyways, other than that, I wanted to once again remind myself to show my Instagram, as I've been posting a lot of trading and Bitcoin related content there. There is a link in the description below. And also actually, Bybit's promotions ending either tomorrow or the day after, whenever the Ethereum merges, which I guess is in a few days, of which they're offering like $1,000 US dollar deposit for $1,000 in Ethereum contract position. Again, you can find that promotion in the pinned comment section below, and definitely read on their website, because there's a lot of fine writing with that. But if you use that link, you'll be awarded that same promotion, even though it doesn't necessarily say it exactly on there. All right, sweet. Let's start it off right on over here. Starting off with Dixie. And on a day like today, where we are going to address some nuanced concepts for Bitcoin specifically, I wanted to be looking for something that's a little more obvious, as that can help with the overall biases. And in this case, Dixie, I believe, is providing that. So Dixie has on the weekly put in about 3 drives of bearish divergence, which we identified over the past few days, and that would be between this peak over here in May, again in July, and then once again right here in the past week or so. And so with a read like this on a high time frame like this, this really does help, at least in my opinion, with a higher term time frame bias to the downside for Dixie, which likely does benefit risk assets going to the upside. Not always it's going to be a direct relationship like that, but on a higher time frame like this, very likely yes. So in this case, with 3 drives of bearish divergence, extremely likely we will see in the next few weeks some sort of a move back down to test around that yellow moving average, which is the 21 exponential moving average at about 105.5-ish. Let's say, give or take a little bit from that number. Very likely a bounce there. And because this is a higher time frame with 3 drives already in there, if there is going to be another leg, which this would be the setup for that, then there could be another leg as far down as like 102 to 102.5 or so. That would obviously take a lot more time, but upon this weekly signature right here, we would kind of expect that to play out over the next few weeks, which means that I owe an apology to the Euro pores, which I made a comment on yesterday. Reading some of the comments, I apologize. Just a bad attempt at humor. Although one of Elsa's friends really did not take well to that comment. She said, my brains do not appreciate this type of comment. And I said to her, well, you know what? Let's just look at the charts. The charts are what the charts are, right? And looks a little bit Euro poor to me over here. Over here, this was Euro not poor. This was very much Euro not poor. Over here, Euro poor. So apologies on that, but just reading the charts. That's all that is at the end of the day. Anyway, sorry, moving on. Hey, look, I live in Europe. I absolutely fucking love it here. I'm just having a bit of a joke. Anyways, going back on to this chart. This is a chart that we haven't addressed. Well, I mean, it was relevant like what? Yeah, the mid of August on that last move to the downside on the rejection from $25,000. Giving us major downside biases from there. But today, the 5-day is closing, so we could very well wrap up this signature. So first things first, let me explain the signal and then explain why it's relevant as of right now, and then what that means depending upon where Bitcoin closes today. And this could even be used kind of judge if there's going to be a trap or not, like the likelihood of such. So first things first, the signal is this. Anytime that the 5-day BBWP indicator, which represents volatility, aka the dispersion of returns, gets down to 15 percentile or below, I define this as extreme lows. So this has happened many times in the past 4 to 5 years, and the expansion phase from these extreme lows has led to an average move of just over 42% done over the course of just under 37 days, so about a month and a week. And the first deviation, which represents where we expect 68% of the results to fall between, it would be between about 35% all the way up to 49.5% or so. So here's the thing. We will see this signal I would say fully done if the momentum pivot is lived above by the end of today, which is going to be on the daily closure at 7 p.m. Eastern time, I do believe. And that is going to be 21,550 basically. That is to say that if Bitcoin were to close below that level tonight, very specifically, let's just even say 21,600 or so, there is a major potential for a humongous trap within this region, of which we would be looking for Bitcoin to fall down, probably back down below 20,000 bucks, maybe even make new lows, something like that. So do keep that number in mind. Again, that's going to be in the next 16 hours, 54 minutes, and 38 seconds. But here's the thing: from that signal that we did get more recently on that rejection of 25,000 bucks, there has been a pretty significant move to the downside. So it would be relevant to say that we've probably seen, the majority of this. So in this case, this would be 30 days, and we've seen about 27% move to the downside, which is outside of the realm of the first standard deviation, yes, but that is where we expect 60% of the results. The thing is, though, is that that's actually very reminiscent of a signal that we saw back on over here, which was the rally in February to about 49,000 bucks. That was about a 26% signature right there as well. So, it's not unheard of in this case. This one obviously took a little bit less time as well. This one over here that we were looking at, about 30 days. So I'd say that is, relevant. It's reasonable as far as the signature goes. But here's the thing: if Bitcoin closes above 21,600, then that would be a really good indication that Bitcoin's very likely going to trade much higher from these regions in the next month rather than to the downside. And the probabilities will start to likely reset, or sorry, not the probabilities would likely reset, but volatility would likely reset. We'd probably get something like this, where you'd see it come back down, reset around those extreme lows, and then explode, around, I don't know, end of this month or something like that. And we'd very likely be looking at a move at least towards 25,000 bucks, probably higher than that. Maybe if things get really crazy, between about 28 to 30,000, which is where a lot of the fun action probably begins. Anyways, until that happens, though, I would refrain from making any other probabilistic analyses. And if Bitcoin again does close below this momentum pivot, that'd be a really, really good signal. The first major red flag warning that we're going to see a humongous bull trap here and come back down, somewhere around the lows, maybe even make new lows. So moving on now, as I reference my my little notes over here, I wanted to put a few more puzzle pieces together for Bitcoin specifically, of which I think Bitcoin's a little bit less obvious than what's going on Dixie, for what it's worth. So let's go over to Bitcoin on CME, and a few things of note right here. Okay, so if I do want to make the argument for a potential trap situation, what else would I put in the mix here? Well, there is potential hidden bearish divergence between this point and this presumed point, of which this would only be confirmed if Bitcoin puts in a local high right here. So how would you confirm a local high? Bitcoin at minimum now needs to come back down and close below about 20,800 to 20,900 or so. Again, the first red flag would be closing below about 21,600 today. So if that doesn't happen, you're probably going to see Bitcoin trade to the upside in the next few weeks. In this case right here, though, you can see that is forming. Also would be consistent on the 12-hour as well. Same sort of numbers essentially apply below about 20,007 to 20,800 or so. In this case, so a little bit lower right there. And stochastic momentum on the short-term time frame, is starting to reach some pretty critical levels. That doesn't necessarily mean that's that move's going to populate, but I would be looking for Bitcoin to trade at minimum sideways here, which is what we're getting. And then we'll come back to it in the next couple of days. Anyways, moving on though, I do think that as of right now, the higher term timeframes are much more in favor actually of another upside move. If I'm just shooting it, being blunt about this, first things first, the 12-hour jewel signal that we identified back on over here after about the first week of September, that is still very much viable. We're still seeing that expand alongside volatility. On top of that, if we go to the 2-day time frame, we can observe that same sort of regular bullish divergence come off the lows, because this was a lower low but higher low on RSI. And we even see that the 3-day is doing the same thing as well here. And even if we take this one step further, I believe that the 5-day, the 5-day also has this in play for CME. Obviously, CME is not closing their 5-day today. It's going to be tomorrow, so a little bit discombobulated there. But ultimately, I do think that is rather interesting. So other than that, if we go and reference stochastic momentum, not on the short-term timeframes, but on the 12-hour and above, well, I'll just kind of let the numbers speak for themselves. As of right now, the 12-hour remains with upside posturing as long as Bitcoin's above 19,650 on the next closing basis. The daily remains with upside as long as Bitcoin's above 18,700, which kind of far away right now. The 2-day time frame is probably flippy floppy, but currently turning to the upside. Or actually, no, it's not flippy floppy. It's turning to the upside from these extreme lows. This was one of the signals also coming in last week that we said, hey, downside's probably done for now. And it's, going to be crossing up today, I believe, above 19,000 bucks. So again, I do think that Boodlaws have a bit of a chance here. It's probably going to be expedited by tomorrow's event. So this is kind of where, technicals should match up with what's going to be going on. But ultimately, I'd like to see the event first and then judge after that, know where those major pivots are. Again, for today, 21,600 upon daily closure. If it is below there, that'd be a good first warning flag. That's, it'd be a good first warning flag. And then fully confirmed on a bull trap below, very specifically bull trap, because that got confusing last week. Fair enough. I think most people got it, honestly. But that'd be fully confirmed below about, 20,700, let's just say. Or if you're on a daily, about 20,900. So ultimately, it's going to be a waiting game for that. I suspect today's probably going to be sideways, maybe another spike to the upside, something like that. And then we get resolution tomorrow upon that event. Okay, cool. So I think that is it for today. Yeah, I think that's it for today. Much love, take care, and see you hopefully soon.